Charter Capital Group was founded by a small group of senior executives with over 80 years of combined experience in real estate finance, real estate investing, and private sector lending. We felt that after the financial meltdown, the way that the average American taxpayer has been treated is shameful. American consumers have been crushed. Our retirement accounts have shrunk. We've lost trillions in equity in our homes. The economy is sluggish and unemployment is high. Meanwhile, banks were bailed out and lost nothing. Some bankers were even paid bonuses. If that is not outrageous enough, these same Wall Street insiders are now trading billions of dollars worth of real estate and banknotes at deep discounts, piling up even more profits, while leaving the individual private investor, whose tax dollars will continue to cover their losses for years to come, locked out. Charter Capital Group was formed from the idea that individual private investors are interested in entering the market for distressed real estate assets, but face a difficult challenge accessing these deals. If you run a private equity firm or a hedge fund, you can walk into the asset manager at the bank with your $10 or $12 million and make a deal to buy distressed assets. Entering this market is very difficult. Just try calling the asset manager at the bank. You probably won't even be able to get them to return your call. The reason is because they don't know you, and they don't need you. Banks are already doing business with cash investors. Some of them have a tremendous amount of cash. A lot of investors want these deals. Banks simply don't need any new buyers. Our business is designed to provide access because we want to form long-term working partnerships with our investors. We have designed a unique investment opportunity by purchasing real estate debt from banks or trustees, using seller financing to create notes and first trust deeds, and then offer our notes directly to private investors at deep discounts. Deciding where and how to invest your money today is confusing. First, let's talk about what features are important in an investment generally. The three most important components of our investment model: 1. Security appreciation. 2. Income. 3. Capital. Before we discuss the fact that our discounted notes cover all three of these components, let's review some common investment options available today and how they compare in this area. Stocks. Security. What are stocks actually worth? There are many methods used to value stocks, but it all boils down to what price a buyer is willing to pay. How secure does that sound to you? What happens if the company loses money or goes bankrupt? Investors lose part or all of their principal. Sometimes billion-dollar companies lose money or go bankrupt. Income. Do stocks provide income? Only if the executives decide to pay a dividend. And if they do pay a dividend at some point, they can reduce or eliminate that payment whenever they choose. Capital appreciation. Do stocks offer capital appreciation? Only if you buy low and sell high. It's not always easy to do, is it? Bonds. Security. General Motors bondholders were forced to swap their bonds for GM stock. They have lost billions. There are many other examples of corporate bond investment risks. 6 states now have junk bond ratings. Income. All U.S. government bonds, from short-term Treasury bills up to the 10-year Treasury notes, have a negative yield today when adjusted for inflation. Capital appreciation. We all know that interest rates must rise at some point. When they do, today's bonds actually depreciate. CDs. Security. Yes, they are guaranteed by the federal government up to $250,000. Income. Not only do CDs provide negative yields when adjusted for inflation, but the interest is considered taxable income. Capital appreciation. Principal actually shrinks due to inflation and the weakening dollar. Gold, commodities. Security. Some people make a lot of money trading gold and other commodities. Others lose money. When experts sometimes lose money in commodities, what are the chances that a novice can make money? Gold is in the news often these days. Many investors agree that using gold to diversify your holdings may make sense. In June of 2001, gold was under $300 an ounce. Today it is well over $1,500 an ounce. So how secure is an investment in gold today? There's certainly a lot of room to the downside. Income: none. Capital appreciation: only if its value increases after you buy it. Real estate: obviously there are many types of real estate investments. We will confine our discussion specifically to the discounted notes program available through Charter Capital Group. Security: you are making a loan on a piece of residential real estate at a loan-to-value ratio of 80%. That means if the borrower fails to repay the loan as agreed, you would take back the property with its appraised value equal to 20% more than the amount you invested. In other words, the investment is 20% less than the appraised value of the property. This 20% protective equity is the security for the principal amount invested. Income: you are receiving the mortgage payment from your borrower every month. Capital appreciation: when your borrower pays off their loan, you earn the 20% difference between the amount of the loan and the amount invested. This conservative approach is one of the reasons that our program is approved for self-directed retirement accounts. The financial crisis of 2008-2009 and subsequent crash of the housing market completely transformed the world of real estate investing. Let me ask you a question. Do you believe there are people making money in real estate today? You bet. There are people making money in real estate today. Now, here's the second question. Why not you? Many people will recognize the opportunities that are available in real estate investing today, but very few will capitalize on them. As we discussed at the beginning, entering this market is very difficult. Just try calling the asset manager at the bank. You probably won't even be able to get them to return your call. The reason is because they don't know you and they don't need you. Cash investors are already doing business with them. Some of them have a tremendous amount of cash. Asset managers are comfortable that when they open escrow with people they know, that the funds will be there and the deal will close. They simply don't need any new buyers. Charter Capital Group can bridge the gap and provide access to this opportunity to individual private investors. Money lending. We will show you how to be the bank, how to be the lender. There are many unique advantages to this investment strategy, namely the fact that it is truly passive income. Appraised value is $90,000. Principal loan balance equals face value of the note equals property sales price equals $90,000. Principal loan discount equals 20% discount on face value of note equals $18,000. Investor purchase price is $72,000. Principal loan interest rate is 9%. Monthly payment, $675. Estimated annual yield is 19.58%. The $18,000 discount is the difference between the $90,000 loan payoff and the investor's note purchase price of $72,000. In 36 months, when the borrower refinances the loan, this is the potential yield. $675 times 36 equals $24,300 total monthly mortgage payments. $24,300 total monthly mortgage payments plus $18,000 discount equals $42,300. $42,300 divided by 3 equals $14,100 annual return on investment, and that's a 19.58% annual return on investment. Buying property is like buying a job for yourself. You are responsible for paying the taxes and insurance. Ultimately, you are responsible for the maintenance and management of the property. Even if you hire a property manager, you are still responsible to make sure they do their job. What about liability issues if someone is injured on your property? Owning notes is like being the bank. You are the lender. You are not responsible for any management or maintenance, insurance, or taxes. Borrower. Our borrowers undergo a rigorous underwriting process. They submit a standard 1003 loan application. We review their credit report and the last 2 years' income tax returns with W-2s. We require 5 years of job history and paycheck stubs to verify employment. We require 5 years of rent or mortgage payment history and proof of funds to close escrow. Our buyers contribute double the FHA requirement for down payment into escrow, and we use FHA guidelines for debt-to-income ratio. The buyer makes the payment to a licensed and bonded escrow company, including taxes and insurance. The escrow company mails the check for the 9% to our investor, who owns the note. Property. We have a cookie-cutter formula for finding properties. We target specific areas within the greater Phoenix area. Properties we use for this discounted note program are all 3-bedroom, 2-bathroom, single-family homes. They are minimum 1,200 square feet on 5,000 to 7,000 square foot lots. Also, because prices are so low and our notes are interest only, the payments are exceptionally low. For example, a $90,000 interest-only payment at 9% is $675 per month. Add $125 per month for taxes and insurance, and our home buyers have a mortgage payment of around $800 per month. Rents for comparable properties in the area run $850 to $950. We have no shortage of qualified buyers. Location. Let's talk about Arizona. There are 2 main reasons that Arizona represents such an exciting opportunity for real estate investors today. 1, it was one of the hardest hit states by the housing market meltdown. And 2, its economy is recovering at a rate that is about double the national average. Foreclosures peaked at the end of 2009 with over 50,000 in process. The result has meant a 50% drop in property values. That's the bad news. This is the good news. Affordable housing, low cost of living, and strong economic growth are some of the reasons that Arizona will bounce back faster than most other areas of the country during the economic recovery. Step 1. Acquisition. We purchase distressed properties directly from banks and trustees for prices well below their current appraised value. Step 2. We use seller financing to create a first trust deed and a note equal to the sale price, which we set according to the appraisal. Step 3. Because we buy properties at such low prices, we are able to take our notes and discount them by 25% for sale to private investors. This program was designed by creative, aggressive guys who want to make money together with you.